Welcome to the full market analysis. There's really not much going on in terms of the markets today, and DXY is sideways. Yen futures are looking stronger, so all the yens are selling off. So if you want to have a go at them, late Friday, just about 20 past 4 in the afternoon here, so volumes will be dropping, of course. And we haven't seen much volumes in the market today. So what I want to talk about today is using the gold on steroids software, but using price action, which is quite useful. And when we don't have a clear trend, you won't get a traditional signal with the stops, the entry point, the target 1, 2, and 3. It just won't happen. So if you are waiting for that, then that's fine. Just wait for the trend to come back into next week, and then you'll get those signals. In the meantime, what I mentioned in the VIP room is price action and the buy zones at 29.20, which was an important previous low from a few days ago or a week ago, whatever. But it's actually drawn on the chart here into this blue zone here, the buy zone as we call it, demand area, very, very high, strong support, as I put in my report. So what you can do now, this is totally up to you how you trade this, but of course using the tools correctly is really, really important. Now outside bars, as I call them, are important as well. I keep banging on about them, but if you don't have the understanding of it, then of course then you will not know how it works. Basically what happens is the price moves outside the channel. When it moves outside the channel, it's like a fish out of water. It just won't last very long. So the price reacts at that point. So these are trading opportunities at this point. So you can trade them. But I want to give you and help you along the way so that you can get into the trade much sooner if that's what you want to do. So here's a trade this morning we had. Very nice profit. More than 100 pips, but never mind. Who's counting pips? So let's have a look, and this is the volume indicator, which is very useful. So let's go over this and see where we can get into a position and get into an early point of reversal or correction. So here we can see we did expect the price to come down off of this high here at 29.32 and down to 29.20. In between 29.20 and 29.15 actually. But now you must, if you have an order to open a pending order at this point in the mid-range, let's say at 29.19, you must have a 50 pip stop. You must allow it to move down and then bounce off and come. It won't be an exact science in terms of bouncing off here then going straight back up. It doesn't work like that. So make sure you've got a 50 pip stop, because otherwise you're going to get tripped out, and then you've got to make another decision to get back in, which is fine, but better to have one trade going. So there's a couple of points here which I want to make. Outside bar here on a demand area, previous demand here, as you can see. So the price has now moved up, and we have a projection possible target 29.51 probably over the weekend or Monday morning or something. But where's the entry? Let's have a look at the entry. So an outside bar on demand, very high demand, strong support area. And you can wait for the Heikin Ashi to go green. That's a good idea. The candle to go green, which is a good idea. It's only a 5-minute chart, so it won't take long. But have a look at the indicator below. And as I go through this, the candle stick goes green. And also look at the volume moving above the 50. This black line here, as you can see, is the 50. And once the price moves above that, it just means volumes are coming back into the market. And that's your buying opportunity. There's also a trigger line here, if you can see it. The trigger line gives you the buy signal as well, along with the high volume on demand on confluence outside bar. So you have a number of events happening on that position. Now if you put in a pending order, again remember 50 pips is usually more than enough, but then you want to go for 2 for 1, don't you, at least. Now sometimes the price takes off and it goes to the moon, but grabbing 100 pips is not a problem. You can grab 100 pips within a couple of hours within gold, rather than wait a week for Forex. It's totally up to you. Gold is far more profitable. So let's have a look at where we are now. So we got projections of price going up into 29.51 or even beyond 29.53 as previously mentioned in the VIP room. And outside bar, price moved out, and we had a volume indicator coming in at this point. At that point went green at 29.26, currently 29.32, whatever it is. And so you could have a 40 pip profit that on that bit there, but you want to go for 100. So let's see how we manage that. So somewhere around there, 50 pips, as I mentioned, is usually more than enough because the price just won't go in one direction, unfortunately. I wish it did. And there's your 100 pips there. So I hope you find that really, really useful. So once you become more proficient at trading, and it takes time, don't get me wrong, this is not easy. If it was easy, everyone would be doing it. But what you can do, once you've got used to the trend indicators and when the gold on steroids, entry, stop, targets, etc. within the trend, you can switch some of those off if you've got a position which is just based upon price action, i.e. it's not trending in a particular way. Just look for outside bars. One here, can you see that? And these happen quite often, and the volume indicator came in and it went red above there, so 95 pips, there's 100 pips there, isn't there, from the early point there. Come back into the channel. It's coming back into the channel now, as you can see, moving up, volume's getting higher, although it won't go anywhere today probably. But a fantastic system which you can use instantly, and just practice. Use a demo account. Use a demo account to get into the position. So these are yesterday's positions. So let's have a look. No outside bars here to talk about. But this is a continuation pattern. This is the trend. So let's put the trend tools on. So when you get a continuation pattern, then you can actually use these tools to your advantage. And if there's no outside bars, that indicates the price is going to continue in the direction of the trend. So we can see that from this yesterday. So these are typical of continuation patterns. So no outside bars. The price has not gone too far too quickly. That's perfectly acceptable. And so we're looking for entries into the trend, aren't we? We know the trend is up, generally speaking, and bullish. We're not looking for sells. So there's one there, isn't there? Have a look at this. If I put a thing there, if you're at your chart, you can go along there. Whoops. There's one there. So 100 pips there, 91 pips there, 78 pips there. Then the trend changed, didn't it, somewhat during the day. Later in the morning, London Open, we had a continuation of a downtrend. Now what happens here is that the price, you get a yellow zone, a supply zone here, which is a sell zone as I call it, and the price breaks, change of character, and then the price moves up, back up into the sell zones. We had this going on here, and then you had the break, and you could have sold it right in the middle there if you wanted to. Aggressive, but nonetheless the chance of it happening are very, very high indeed. And as we can see now in this instance here, we had another yellow zone here. It's gone now, it's been taken out, but we had another yellow zone at this area, and guess what, we do have an outside bar. Okay, so the outside bar within the downtrend, look at the color of the moving average, the 50 moving average, and we can see that the price then moved down, and you could get in at a very early stage with a 37 pip stop in that instance and grab a 104 pips. Now at the same time, what happened here on demand, there was no strong demand area yesterday, but we can see there's a bit of one there. There's a better one down the bottom. But we can see that the price then changed direction and a change of character. So once you get that going on, you can actually get into this position. Now have a look at the volume indicator as well here. Let me line this up. So as it comes down, look at the volume indicator coming back up above the 50 in red. And then you have the signal line. Don't wait for the signal line, just sell it. And again here, have a look at that. So the signal line, price moving up into the sell zone, and then volume is increasing, going red. Let's widen it out a bit. So again here, again practice, you'll get it. And the price moves above the 50 and above the 50 moving average, above the 50 moving average, below the 50-day moving average, below the 50-day moving average. Volumes moving higher, red. Volumes moving higher into here, and everything goes green. 100 pips there. It's probably 100 pips there as well. Outside bar, guess what you do? Yeah, you got it. Don't go long. Don't go short. This is perfect. Into a very strong buy zone, very strong support, as I mentioned. Wait for volume to come back into the market and then buy it immediately. Hopefully you find that helpful. Not much going on. Have a wonderful weekend, by the way, and I will be doing the weekly Forex forecast from the long-term trends.